Good morning, good afternoon, and good evening to you all, wherever you are joining me at this hour. Welcome to 102 edition of Investdata Trading Academy Live with Ambrose. The market at the global stage has continued it meets the sentiment or it meets trade as we speak at this hour. The market is not doing badly, but only that some regions are still shaking, while others are extending. They are almost 3 days market up market now, starting from the previous week to this hour. It tells you that the market is really doing well in that space. But for me, I would say that the market as we speak still remain mixed at all level at this moment, especially in US market is in mixed as we speak now. Dow Jones is in green, S&P and Nasdaq is in red. While European stock market opened higher this morning as the global positive sentiment was sustained all this while on the back of heavy corporate action, and they also know, investors' confidence or consumers' confidence coming back gradually as Russia negotiation to restore gas supply to the region, reducing the fear of energy crisis, has also supported the market in that region. You can see as we speak now, even also in uh, in UK, where fear of inflation hitting 11 and above. Despite that, you can see that those Europe markets are still also looking up, and also as also they are looking forward in Europe of a EU meeting tomorrow to hike rates, with interest rate within a range of either 25 to 50 points. The first time since 2011, you can see what is there, and these are the things that are also driving the market globally. But back here in Africa, we see that also market is still missed. In Nigeria here, our market is a bit down now as we speak at this hour. Other market in Africa, some are in green and some are in red. While in Asia market, also equally remain mixed at this hour. It tells you that the market in all this at global level is also mixed, reacting to different news and different information coming around. That's why I said it is not a strategy that you trade here, you use the but what is very common is that in any market you are trading, either you are trading any instrument, in any market you need to apply what stop loss, have your trade plan, exit, have your exit strategy and entry strategy, at the same time your profit target. This does not matter the market you are playing. These are things that will guide you as a trader to know exactly what to do per time. That is why it is necessary for you to have this at the back of your mind as you are open, as the market is open at this hour at a different level or different climate or different environment. It is now done on you to know exactly what you want to achieve in the market as we speak now. For me, the market is still not bad as we speak. Down home here, we saw what happened yesterday that there's another hike in interest rate, in Nigeria with almost 100, basic points again from 13, percent NPR to 14. This also is sending a lot of signal, to the economy and also to the market and also to the financial world. But as investor, it is now done on you to balance this signal and see where you can also maximize profit in all this environment. Because let's just take it like this way. If you look at our market now with this interest rate hike, yes, it's going to put pressure on the real economy, the real sector. But on the other way, it's going to kind of trigger circular flow of funds in the financial market generally, for financial market, and also for investor. This is also going to send some kind of fear, especially those that are in equity market. And this I know most of the people in the market are retail investor. Why those that are in the real fixed income market are more of what of the big players, the banks and the PFA. But you as a player, where do you go? And how will this hike in interest rates going to move fund and also going to influence performance of companies that are listed on the exchange? These are the key things you'll be looking at. I will be looking at this hour to know exactly where to be, as market continue, or as we go into the go to the third quarter to also the last quarter of the year, and also as electional activities continue to unfold, moving from one point to another. The good thing is that in any economy, in any market, in any climate, you can't separate totally economy from a capital market. That's why I say capital market or stock market is a leading indicator in economy. It tells you, or also it is policies that are being made within this economy that influence the activities in the economy. And that is why I always say that if you are listening to the video that have been posted already in the channel or in our channel, that's why I say encourage you subscribe. I know you have gotten it even before this class, but I've listened to it also. Like when I explain this class, it will become easier for you to also understand. We have what we call the economic cycle. We have what we call the market cycle. At the same time, what we call the sentiment, or we call it a technical cycle. But also because in any market, there is what we call oversold and overbought. These are the things that will also guide you whenever you are seeing this kind of situation. And also you want to know where is the state of the economy now, what circle or what stage or what phase is the economy now, to know exactly what to do. And also, what is the market doing? Are we in a bear market or in a bull market? Or what's the market pattern? Are we in accumulation stage of the market, or we're in a markup stage, or we're in distribution or a decline stage? If you understand how to use all this, it's going to go a long way to to reduce your tension. It will not cause you to panic, but rather you look at, oh, because with all this that's happening, we want to see continue what we call continue secular rotation, moving from one sector to the other, looking for where you can hedge against inflation, where you can hedge against what that market, and where also you can play defensive to protect your capital and at the same time make money. Because in where you can have less risk, yes, we know that capital market, it has high risk, but if you take calculated, risk, you are bound also to smile to the bank. But if you really want to hedge against inflation, there are some sectors that also some companies that because of the activities and what is happening, where fund will be going exactly to know what to do with those funds. Because I'm telling you, as I said earlier, those big players in the market, they also want to balance their portfolio. They don't want to put everything. That's why we know that the fixed income market has less risk, but they don't want to put all their fund there. They want to also start some going to where they can hedge against, because even though it's a long-term fund they are managing, they need to also make money. Not at the end of the day, no inflation will erode all the value of the money they are managing. That is why you too, as a retail investor, as a trader, you need to see where is the market going from now with this information that hit the market yesterday. Yesterday, so the market was a bit flat. Market lost like 0.02, but today, as we speak now, market almost 100 point. That's about 0.2 already at this hour, and the market is down. But that will not send panic, but rather we want to explain how to use this market cycle, economic phases, market pattern, and also the technical situation of the market, whether the market is on overbought or oversold. The first thing I want to look at, if you look at the market generally, the economy generally, the factors that tells you where the economy is going, also look at which sectors also have done well. You want to look at the inflationary pressure we are having, looking at the continual high rate, what's going to do to productivity at the end of the day. Yes, we have seen that even in US market, you can see that US economy, their first GDP was already down. If the second quarter was very down, that was kind of pronounced recession or whatever we call it. Then, but ours here, we have seen a lot of kind of contraction. Looking at the last GDP we saw in Q1, we have a 3.11 against 3.89 for last quarter 2021. That is also a sign of contraction. I've told you that if you look at the purchasing manager, the same thing, and that tells you that automatically the five phase of the market, which is the early expansion, mid expansion, and late expansion. It is the interest rate at this interest rate, inflation, and national the industrial output or national output of the GDP will tell you what is happening at this different stage of the economy, and which sectors or industry will benefit more from this thing is also what you want to look at as investor. That means you now as an investor, you want to look at where can I hedge against inflation, where can I stay, and also my money will not be eroded, I will not be panicking. That's why this class, we're going to continue in the subsequent class. But today, we want to look at the face of the economy. The face of the economy, as I said, the early expansion is where you see it relatively low interest rate, inflation is low, and output is what is up, because cost of fund is low, inflation, the purchasing power of people are still strong, and that also oil the production activities, people are consuming, and you are seeing a positive output. Then when in the early mid expansion, this trend continue, you can see a little interest rate might a little up marginally. Also inflation, can see output also still continue to grow. But once you enter the late expansion, we have seen that inflation has taken up. Also, interest is also on the up direction. and that will start hitting what the productivity. But you see, in this case now we're having globally, we see that what is happening is as a result of what distortion in supply chain, which I've said earlier, and that is also causing cost of production around the globe to be high. And if you are also increasing cost of fund, automatically it will lead to what recession, because as you are increasing from people who also will reduce consumption because they don't have money, and also cost of production will and people also will not expand because they are not having access to fund at a cheap rate. For that, they will reduce what they are doing, and that will affect the economy, and the economy that will go to recession on that. But for here, what we can see in Nigeria, we're just this is another hike we have just seen. We have seen the result that came from Unilever, the consumer goods, how cost of fund and all have bastardized their Q2 number. If not what they've done in the first quarter, their 6 month result will not be something to write home about. But that first quarter and all has made that that company result for 6 months a bit okay, but it's going to see more of this result. But the one that came from you can tell you that you can see that because of the nature of their service, they are not spending much little or much cost because of what, even though they have a borrowed bond in this financial market, what they will spend is not what much also those in the manufacturing sector will spend, because they have different, they can even switch from fixed income market to Naira easily. But those in the real sector cannot switch from producing bread to start producing no um, drugs or start producing cement. No, you can see what we are. That's why you need to look at which sector will benefit from what we are seeing now. But as we have said earlier, in this sector now they've increased rate. The sector that will benefit from it first we have seen increase in what in fuel pump price. That already will have a positive news on what is happening globally. In it. That is a plus. The increment they've done in price is going to hit inflation the more. But the sector, the company in that sector where they increase price, is going to benefit because they're going to improve their margin. And don't forget that most of these companies that are into oil, they have also they have a inventory already before the increment that will also improve their margin. Not only that, we have seen globally that they will, because of high oil price or crude oil price, you can see companies that's a touch talking out good result. And also, you see also the rate hike in the banking in the by CBN going to impact the banking stock. That's why when I see banking stock this morning dropping, I'm not surprised. I said this is just a fluke. It will just people don't think that in the real market where you should put in your phone now is those good banking stock that will not go into the future as we start seeing that third quarter and full year because of this hike in rate that they play more in the space of fixed income market, even Treasury B and federal bond and even the Omo bill. For that, I expect that this also going to impact on the banking sector. For me, once we are seeing their Q2 number and also the dividend coming, will give you an insight to what we're going to see. But I believe that it's going to impact on their interest margin, which I've said earlier. But with this strike again, it become more glaring that that is where we'll see more better number compared to those manufacturing company, or let those manufacturing companies are able to pass their cost to what to customer. And also there's a level you can pass your cost to your stock, your goods or your goods will remain on the shelf. That at the end of the start, start affecting your bottom line. But for those companies that has what we call inelastic demand for their products or their services, they will expect that to keep on. That's why I said sector like agriculture sector, where we know that demand for the product and we need it. You can't say because you are too poor or too rich, you want to stop using oil, you want to stop using some things that come from that sector. And at the same time, when I say telecom or communication service, these are also or ITC is essential because we need it to work to even make cost come down for most people that are also into one thing or the other. For that sector also will receive a attention. We'll see more positive number coming from that sector. Also, the industrial goods, fine. Most of them back here have done kind of integration, having their own source of energy. But still, because it's going to cost them money, the number for this half year might not be too bad. But going to the future, you might see a kind of slowing down in terms of their performance. But for those that are coming from manufacturers, from telecom, healthcare, the agricultural sector, I see an industrial, I see good potential there because even as all this happen, there will still demand for these products in this sector, these services, and for that, we're going to part on their bottom line. That's why oil sector with this increment, I see that those sectors those that are consistent and those also the management is very important. Leaders in that sectors who are mentioning is also very important. See the management structure patterns, see the number they are producing, see the shareholding structure. All this will help you to know exactly what to do in that space. That is why I said there's no cause for us to panic, but rather for us to look at our portfolio and do Be diligent by what? Knowing which where we should be and where we should not be. And also when we come tomorrow, we're talking about what the patterns of the market, and also we'll talk about what the overbought and oversold region. But as we go into our discussion this morning, we'll still do some overbought, and so that you understand what I mean by that, so that at the end of the day, you won't be panicking what is happening in the market, because we are already what in the right position, we are in the right stock already. What you don't do, just relax yourself and also hold on. But we know that yes, what is happening because of rate hike, normally anywhere in the world, when there's rate hike, the capital market will shake before, equity market will shake before, it balance again and continue. As we speak now, the result that came from US, especially from the Netflix the Netflix Q2, you can see that it was positive. That's also what really supported that my market around the globe. All eyes are on these numbers. Also here, we're going to see more numbers that will help us to know where we are going as a market, or what is happening in the market. For that, you don't need to also panic at all, or rather invest in good stock that has positive sentiment. Earnings are rising, on the increase, price is moving up, volume is moving up. Once you have all this in the stock, there's no need for you to panic. And because the earning is there, that will support price, it will support dividend payout at the end of the day, and that will attract even more investors or more design investors to come to that direction. That's why I said you don't need to panic, but rather just hold your position, because I see that like today, tomorrow, because of the adjustment, you can see that portfolio reshuffling going on, and sectoral rotation will go on. But I tell you, the sector that is a bit down this morning now, I can see some stock like even access GTB looking down. It's an opportunity, even UPA, because when they start seeing number come, and also don't forget that company that are also earning dual earnings, like I said earlier, in one of the master class, dual earnings, even as you earn in dollar from all those countries. Yes, I said it, that most of them find a way of exchanging it. They might not change through the official channel, do the parallel market. That will come also a plus. But if you are earning, the people are buying your goods here. If they are coming to buy in dollar, you are taking them in buying dollar. They can buy more, and that is why the top line of most of these companies that are in my friend sector are really good, top fine, because most of their goods are crossing the border, going to that side for sales to make money. But at the end of the day, cost of operation is what is killing these companies. But I believe that with time, let's see how we're going to. But as I've said, there's not all sector you should play now. There are sectors that have close substitute of their product and services, that even when you are increasing price, they can dump you, and you are not making. If they're having eight people coming to patronize you, once your price continue to go up, they cannot afford it. They can reduce to two or three, and that will not be good. And they also close where they can get it cheaper. That's what you'll be looking at. Good company that even when they increase their price, there will still be demand for their products. People will still need it because it's essential. These are where, like all those staple food, fine, because no matter how poor or how rich you are, there are things that it's essential that you want to eat, and for that, you don't play with them. This is what we should also be looking at. Yes, quick one. Let me just call on this CCI indicator for us to look at the market, so that we can continue our discussion. Let me call the chart up now, so that we can continue and see what the market is doing now. But let's just see what the market is doing, because I believe that there's no cause for alarm. Yes, the decision might not be so good, but you don't need to panic, because you want to see where the market is, also what the market is doing. This is for this. I've called the CCI up. I know why I'm using it this morning, as I want to call the money flow and our C line. Okay, T line, change it to 8. Okay, even as the market is this morning at this hour, the market is still a bit slightly above the T line. But before we start looking at the chart, we want to look at the state of the market as usual. As we speak now, we're seeing that the market is, I've said it earlier, the market is down by 0.2%, losing a 100.11 basic point, trading at 52,208.77 point. At this hour also, we're seeing also the breadth is still not too good. We have a negative breadth. We're having 8 losers against 5 gainers. The 5 gainers here, we can see the life of Multiverse, Academic Press, Charms, and Japan Gold and Mansard Insurance. These are the top gainers, and these are five already. Then for the losers, we have a NACO topping, followed by Codeville Business Solution, FBN Holding, GT Code, and Sterling Bank, and others that are in that category. These are the losers, are this the top losers as we speak now. While in terms of volume traded, the top trade in volume was St. James leading now, followed by Access Corp and the GT Code. We see the life of Japan Gold and UBA. These are the ones that are topping the volume chart at the market at this stage. But want to chart what is happening in assets, the volatility is increasing, that of GTB. Look at UBA, still go and watch what is happening in FBN holding. Then we'll come and see academic press. Is it rebounding? And also Mansard Insurance. Want to look at this stock? We know already that in for NACO, we can still look at it, but NACO is purely profit taking at this hour after it has rallied from almost from 4 naira to almost 9 naira, 38 kobo. For that, what we are seeing in NACO, we also saw it in academic press, saw it in a Carverton, and at the same time like what we call the CWG, which is the computer warehouse group, because they've rallied recently. Profit taking is about to happen. But for our market, I see that because of those cap stock that control about 70% remaining up, even as this hike in rate won't affect our market more, because those big ones are not losing. The low cap and the medium cap, but if those big cap that raise the market up start losing, that is where there will be danger. But if not, this market, because also most of the sector that need attention now, where people should be looking at, are those sectors that support the market as we speak. For that, I don't see the market coming down unless there's a general no issue that comes to a state that the fear or the tone in the political environment change overnight. But if what we're seeing and the way it's going, I don't see much happening there apart from the liquidity we're expecting, which the CBN said that is why they also hacking it just to control money and at the same time to attract foreign investors. I can see that this morning you can see that the yield in the fixed income market and all is looking up. You can see that Naira is also gaining and all those stuff because we want to attract foreign investors. But look at the company that are operating here. Would they sustain their operation? It's not going to lead to what to unemployment if they start kind of downsizing because of high cost operation. What will it lead to? That also lead to what we call the low output, national output at the end of the day. But as we speak, let's still keep our finger crossed and also invest in the sector that will also support our position with the performance in terms of earnings and also looking at the sentiment in that sector and also individual stock we are in. But as we speak now, the market is still, let me take this so that you can see it very well. What is market doing now? Is it above or below the T line? It's very, very clear for you to know. You can see that the market is still above what? Above the T line. But kind of side trading, you can see what happened yesterday after market again. For 2 days, you saw a little 0.2 down. This morning, I said market is down with almost 0.2. You can see here, and the volume traded as we speak now is still very low. We can see the position that market is still above the T line. That's why I said there's no much cause for alarm, but we want to keep our finger crossed as investor. But let's keep our eyes in the market. As I say, you don't invest and go and sleep. If you come down, you can see that even the CCI, which is the commodity channel index, also acts as a overbought and oversold region. Anything that's outside this, whenever it crosses below this shaded portion down, here are oversold region. Right? So when market enter here, what you see, the next thing that it bounce back, and when it bounce back, it confirm an uptrend, and anything above here is also oversold region. That means here is where you see. But if you maintain an uptrend, good after the overall region, but you know that the markets are as we speak now, because the markets are trending, you can see the trend is also looking down here. Yes, you can see that market here is also at the overall, looking at this level, but it's coming back. But I believe that when there's a change in trend, you saw what happened here. When there's a change in trend, when it was a trending, market was moving this way. But this thing move up when we had that change by when Ether go and gain about 10% in a day. That changed the market on Friday. You can see now market also kind of side trending as we speak now. That market is at what we call distribution phase, side trending, not up, not down until it break down again. Now see market have ended decline. To speak now, market is still above the T line. And the good thing is that if you look at the money flow, despite it's down, but it's showing a sign of trying to look up around the 26. And this one I've gone even as low as even 24 with 25 yesterday, but coming up to 26. Fine, let's see what's going to close for the day. As I said, there's no cause for alarm. the market is still very, very strong on the long run, but you can see that it's a slowdown because of what this what we call either panic selling now or portfolio rotation because of what the hike in rate. But I tell you, between now and Friday or early next week, even when more number comes, you can see more of sectoral portfolio reshuffling and sectoral rotation selling to enter. That's why you too also should know the kind of position you are and where you can exit or you can hold at this point. It should also be at the back of your mind also because it's very, very important for you to also know why you are there and how long you want to stay and what is happening. Is there positive momentum in that stock? These are the things that will guide you to stay, how long you want to stay in that stock, especially if you are seeing that the factors that attracted you are still very much intact. You also need to also to stay and watch. Yes, let's quickly look at the assets that is also coming down. So assets around the 915. Let's see access curve. If that is the place, we should also go and start putting position. I believe those that are in this group or this class, I've told you what to do with access call before now. But let's see what the chart is saying. I know that it's still, you can see on a day chart, you can see that it's trying to set down, trying to resist it. You can see around the 15. I touched 9 naira. I've touched 9 naira, but now around 915. And money flow, you can see it's almost entered oversold region already. You can see it's below it. And when you sell market at oversold region or stock, it gives you an insight to what is likely to happen. At the final region, you see attraction of start coming. At overbought, you can see that people have stopped buying, start coming at. But now at this oversold region, you can see whenever I touch here, it bounce back. Where it's going to turn is very soon. And also you can see that money flow is also telling you that even as it's going down, there's some fund entering the store, gradually here. For me, let's keep our face, eyes, and all in the access bank. But let's look at the 1 hour chart for access bank. That will give us a good picture. It's also at oversold region. That means this stock is a stock to watch. Any moment from now, it will come out from. You can see any, look at the what is here, went up. You can see that when you are seeing it here, it's a time to buy. And if you look at this, what we are seeing here on a one chart, this is almost like a double top or double bottom, sorry, and get to the same level. That's almost a 905 905. You can see 9 naira is bouncing back at this two. You can see that's not broken down. That might be a strong support level for the stock. That's why you can be buying gradually, but as those that want to use trading strategy, you might want to wait to confirm until breakout. But for those that are long term, this is the time you can start. Especially if you're investing for the expected entry dividend and dividend at the end of the year, you can start buying it because you are buying for a long time. You can buy there even when it goes up, you can still be buying. It's a good time. Here it's also forming a double bottom already. You can see where it has touched the place, has not broken down. It's a strong place to watch on our chart to know exactly what is happening. Because of our time, let's quickly look at what is happening in UBA and GT code. But let's look at UBA first because our time is fast spent. But let's see. Let's take a little time here. It on not post time. Let's look at it. UBA as on the 1 hour chart, you can see this has been a strong support level of 7 naira 40 kobo, 7 naira 45 kobo, good one. But we can see strength coming gradually here. Money flow is looking up, and the TCS said that it's still on a good region. It has not broken down. This was not up. That means that potential to go up. Let's look at the 1 hour a day chart for UBA. UBA is slightly below the T line, and you can see it here. The T line is coming down gradually. If you look at this, you can see, but that strong support level of 45 is still holding. You can see it here. I think that 45, the next one is around 42, which is here. You can see it has touched it here, touch it severally. It has not broken down. That means that's why you need to keep your eyes on UBA. But before we finally look, let's look at this GT code and FBN. Then I will look at what is happening in Mansard. We're seeing Mansard there trying to look up, trading around. You can see there is on a day chart. You can see that GTB is below the T line. You can see it here, but this is stock that you also keep your eyes when the price become attractive, going to jump at you can see, but money flow is still looking up and the momentum indicator is looking down. For you to also consider, see that as the price is coming down, this pullback here, but I see it has been above the T line on this, so I try to maintain uptrend. But now it has come down there too. But for those that want to cut for you to play safe and say you want to cut loss, cut your loss, want to It depends on your investment goal and your cost loss or stop loss position. But for those that want to take position, anything lower at this point, you should be looking at all this. We're seeing this price coming down and see that have a strong support level here. If you want to wait to come down here before you buy, it's also another strategy. But just keep your eyes on there on VT code. Let's look at the FBN holding. FBN holding, very very important. FBN holding, you can see the chart pattern for me is a good one. You can see that it's resisting decline here, but let's see. At this hour, you can see that they still within the box, that not trading down, and money flow is still high, reading around 78, but looking down slightly. Let's keep also our finger crossed in. Let's quickly look at 1 hour chart for FBN. If I look at on the 1 hour chart, it's trading below the T line. You can see it coming down, but let's keep a work cross for 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 FBN. Let's look at Mansard. Then can now talk of finally look at the academic press to see what to do with that stock now. Mansard for me on a day chart, on a 1 hour chart, is trading slightly below the T line. You can see where its position is, not too bad, but looking down. But money flow is looking up on this stock. People are taking advantage of the price when it touched as low as 198, but I can see money flow is doing around 31, but it's a kind of back. It can also turn from this point again. It's possible to turn from here. That tells you that you don't need to also panic at this point. Rather, just hold your position, and if also they sustain their three dividend for that stock, let's look at a day chart. It is happening in the stock. You can see even when it is kind of on a red position, a bearishness here, you can see that it has not broken down the T line. As we speak now, it's trading slightly on the T line, and you can see one here, this one looking up when I mean the momentum, not too bad, and you can see money flow looking up slightly. We need to see because of the state of the market. The market is a bit calm, looking down. Let's watch and see how the market will end the day today. On this note, we'll draw the curtain here. I'll say big thank you for your time because our time is fast spent. I'll say thank you for today. We look forward to see you tomorrow. For any question you have, you can quickly go to our social media or one-on-one, can send WhatsApp and the answer will be given, or you want to wait till Saturday, fine. But I'll tell you, like always, encourage you, try and also subscribe to our YouTube channel so that you will get an update. We did one, this one was posted this morning, early morning, to understanding the big picture and the changing market dynamics and economic dynamics. You need to understand this. Once you know that, I think you won't be panicking, but you make what informed decision with confidence and with also expectation to also to make more money in the market despite the uncertainties and the high volatility in the market. I say see you tomorrow and enjoy the rest of your trading day.